This is BoomBust, and these are the stories we're tracking for you today. Prolific businessman, investor, and author Jim Rogers is on today's show. You won't want to miss him. He's giving us his views on everything from trade agreements to emerging markets to farming. You definitely won't want to miss it. Then, plus, you think business in Europe is squeaky clean? Think again. We'll tell you why coming up. And finally, in today's big deal, Ed Harrison and I discuss what those pieces of paper in your wallet, what they're actually worth. Yeah, you know those things, those dollar bills or pounds or whatever it is, wherever you're watching from. You won't want to miss a moment of it, and it all starts right now. Our lead story today, the price of corruption, specifically in the European Union. Now, a recent report published by the European Commission revealed that corruption costs the EU roughly $120 billion a year. Now, that's around 1% of economic output. Overall, 43% of firms in Europe see corruption as a problem, and almost half of all companies doing business on the continent say that corruption is an issue for them. The report now is a major blow to the EU, which is often portrayed as one of the world's cleanest regions. However, encounters with corruption do vary widely across the bloc. Now, the recent report says that EU citizens believe Greece, Italy, Lithuania, Spain, and the Czech Republic are the most corrupt, though corruption is considered rare in Denmark, Finland, and Sweden. In fact, in 2012, the Corruption Perception Index ranked Finland as the least corrupt country on the planet, and in 2013, Denmark was ranked least corrupt. However, for the same year, Greece came in at 80, tied with China, not good, and the EU Commissioner of Home Affairs, she said, quote, "Corruption undermines citizens' confidence in democratic institutions and the rule of law. It hurts the European economy and deprives states of much-needed tax revenue." Bottom line, keeping it clean keeps you in the green. At least in theory, it should be that way. Famed investor and author Jim Rogers is a bull on China and Asia. Now, he sees a shift in the economic importance of Asia and has even relocated his family to Singapore to be a part of it. But right now, the emerging markets are a big concern for many people. Now, we're keen to get Jim's views on the crisis in emerging markets, as well as his view on the U.S., European, and Chinese economies. Check it out. Now, Jim, I want to start off by asking you about the U.S. and specifically its propensity to rebuild after it destroys. Now, the U.S., they spent $100 billion in today's money on the Marshall Plan to rebuild Europe. And in total, the U.S. has spent about the same on Afghanistan, a country with a GDP that's estimated to be about $20 billion by the IMF. Now, the question is this an example of how America's militarism is wasting money that could be spent investing in the domestic economy?
There is no question that we're wasting a huge amount of money here, and $100 billion on Afghanistan. Most Americans don't know where it is. Afghanistan is of very little consequence to the U.S., and yet we have spent $100 billion and lost a lot of lives, American and Afghan. What is this? You know how much $100 billion is, Erin? We could do a lot of stuff with $100 billion. Schools, highways, lots of things.
A lot. And I mean, it is a tremendous amount of money. We're talking billions with a B here, not millions. So there's a lot that can be done. Now, I want to ask you about trade agreements. There's a lot of talk lately about the Trans-Pacific Partnership here in America. What's your view on it, and would TPP, the deal, be good for growth?
Well, open markets and free trade is good for everybody. It makes everybody have a higher standard of living. Yes, some people suffer as they get dislocated, but overall, in America, there are 325 million Americans. We're all better off. Some people will be much better off, some less better off, but overall, we're better off. So free trade and TPP, assuming the conditions are equitable and honorable, will be wonderful for everybody. There's no question that opening markets is great. Do you want to go back and buy expensive TVs again? Of course you don't. Do you want to go back and buy expensive cell phones again? Of course you don't. You want to buy cheap, efficient cell phones and products, and that's what you get when there's open markets and free trade.
Now, I want to ask, though, as a follow-up, is it really free trade when there's these multilateral trade agreements there between countries? And NAFTA, specifically, that didn't turn out to be great until about 20 years later. You know, where do we stand today? What about free trade, just free trade? No trade agreements, just the whole global trade market being free?
Well, if I did it my way, that's what it'd be. There would be no restrictions, no tariffs, no customs duties or anything else. People would just do, you know, 100 years ago, 200 years ago, that's where it was, Erin. You think if you wanted to send something from Europe to the Middle East or something 100 years ago, you had to go through all these trade regulations and agreements? Of course not. People, if they had something good, they sold it. You remember Marco Polo? He went to Asia, he bought all kind of stuff, brought it back. There was all kind of trade on the what's it called, the trade route between China and Europe. It was huge amounts of trade, and there was no restrictions, government controls, or anything else. That's the way the world would be better off. The Silk Route, that's what I was trying to think of. Remember the Silk Route?
The Silk Route. I mean, what are your ties made out of? We know that.
Nice silk from somewhere.
There you go. Now, Jim, we spoke with George Magnus last week. This is kind of a non sequitur here, but he told us the emerging markets crisis, that it has only just begun. And I want to play you a clip from that interview. So here it is. People are calling the volatility in these markets an emerging markets crisis. Is it an emerging markets crisis?
Well, I think it is, okay, because I think that every crisis needs or has a lightning rod that basically...
Now, Jim, do you agree with George that an emerging market crisis is only just beginning?
Well, the problems in the emerging market, and first of all, there are lots of emerging markets, some better than others, but there's some serious, serious problems out there, and they are going to get worse. Turkey, Indonesia, India, this is not over yet. Brazil, there are plenty of them that have serious, serious problems, and they're not being resolved. Part of the problem, of course, the major problem, is the Federal Reserve in America has interest rates at such a tiny low level that people can borrow lots of money, and America's printing a lot of money, so there's plenty of money and liquidity, there's a lot of money to be borrowed. And so a lot of countries have borrowed the money which cover at cheap rates, which covers up their problems. They haven't addressed their problems, and so now we've got a huge problem facing us, and it's going to get worse. This is not over yet. You should be worried and be careful and be prepared.
Now, what I want to ask you now about, a lot of markets have seen turmoil, places like South Africa, Turkey, India, Argentina. Where do you see trouble being the most warranted, and why?
Well, the debtor nations are the ones that are going to suffer the most because they have the availability of a lot of money at very cheap rates. America's going to have a lot of problems in the end. The ones you mentioned are all going to have problems. It's the countries that have big balance of trade deficits that need to borrow a lot of money, such as America, some in Europe, and mainly America, mainly the countries you mentioned. That's where you're going to have that's where the crisis is going to get worse. But everybody's going to be affected. When America and Europe have problems, everybody has problems. Those are the largest economies in the world.
Yeah, yes, and last time we spoke, you actually said that the Fed's printing money, it was causing a wave of liquidity to spread out, but that someone, presumably us, was going to dry up when that wave receded. Now, the question is, the Fed is tapering now. The wave of liquidity is receding. Do you think this is what's triggering the crisis?
Of course it is. That's part. Well, the main problem is the huge debt that keeps building higher and higher and higher. Second is many countries did not take advantage of the good times to restructure themselves, get rid of restrictions and controls. And thirdly, now the U.S. is pulling in its money, and a lot of people have been relying on that money. So now it's going to snowball and get worse and worse and worse. But what's going to happen, Erin, is you're going to see the pain get worse. Eventually, the people in Washington are going to panic. You've got to remember, these are bureaucrats. These are academics. They never had that's why they work for the government, because they can't get a real job. So they're going to panic. They're going to say, oh, we're sorry, we're sorry. They're going to stop, maybe even print money again some more. Then people are going to heave a sigh of relief. Markets will rally. And then we're going to have the real crisis, because the next time, when the money starts receding, there's nobody to bail us out.
Jim, in your opinion, which emerging markets show the most promise for investors right now?
Well, the best are places like Myanmar or North Korea or China, some parts of the Chinese economy. They have said that they're going to give incentives and spend a lot of money on some parts of their economy. You should too. Russia's in good shape. I mean, it's astonishing to me. Russia doesn't have exchange controls. Russia has huge international reserves, vast natural resources, totally disliked by everybody. I mean, I'm sorry to put money in Russia. Well, you know, I'm astonished. I was bearish on Russia for 46 years. Even I am putting money in Russia now.
Time now for a very quick break, but stay tuned, because coming up, more from my interview with Jim Rogers. He's giving us his thoughts on Europe, China, and agriculture. Yeah, farming. You won't want to miss it. Plus, in today's Big Deal, Ed Harrison and I break down the cryptic messages living inside your wallet. You're definitely not going to want to miss that. Stick around.
Are force-fed.
Two explosions near the finish line of the Boston Marathon.
More than 1,000 people have gathered.
What is the latest that you're hearing about the number of victims?
We're back with more from investor Jim Rogers and author of the recent book Street Smarts. Now, Jim was recommending investing in Russia before the break, and I asked him, though, if he thought his country recommendations were insulated from the crisis, or if they too will feel the pain.
Everybody's going to feel the pain. America's the largest economy in the world. It's also the largest debtor nation in the history of the world. So when those problems come, it's going to affect everybody. Europe as a whole is an even larger economy. Well, they've got serious problems facing them too. There are many potential problems out there. Erin, you should be worried. I'm trying to get you worried.
I am terrified, Jim. Make no doubt. This is the stuff that keeps me up at night. Nightmares over this. I'm glad that you brought up Europe, though, because, you know, in Greece, Spain, Italy, and Portugal, government bonds are all on the rise. What's going on over there? Tell me.
Well, things have calmed down. Things are not getting dramatically worse and falling off a cliff at the moment. The bonds fell off a cliff a year or two ago, totally collapsed. The world didn't come to an end, so now they're rallying. But when the crisis comes next time, or semi-crisis, whatever comes next time, they will go back down. The problems of the world are not over. Greece has not solved its problems. Spain has nobody has solved their problems yet.
I mean, that seems pretty clear. You know, now Japan is engaged in massive quantitative easing and deficit spending. As the government debt to GDP, the level has reached I want to get this right, it's 230%. Do you think this ends in wealth confiscation? How could it possibly end otherwise? Other ways?
Well, it's a terrible shame because I love Japan a great deal. But you just pointed out, Japan has staggering internal debts. They do have a lot of international reserves, but internally they got very, very high debts. Mr. Abe, the new guy, is printing huge. He has said, I will print unlimited, that's his word, unlimited amounts of money, and he is borrowing even more money. Now, I own Japanese stocks at the moment because of all that, all this money that's going to be pushed into the economy. But 20 years from now, or even sooner maybe, we're all going to look back and say, you know, Mr. Abe ruined Japan. That was the final death throw of Japan when they just went over the cliff.
Now,
I mean, they got declining populations.
Right. There's a, you know, I'm sorry, I interrupted you. You were saying, continue, please.
I was just going to say they have declining population, staggering debts increases, debasing the currency. I mean, it's going to be a nightmare in the end. He's going to go down in history as a disaster.
Now, on the other side of the argument, people say that Japan, it can't default because they can print their own currency. What do you say to this?
Of course they can. You know, the currency goes to nothing.
Right.
And you may get paid, but you're going to get paid in worthless currency. Every country in the world that's done that, Erin, has ended up in the tank. This has never worked in the never has it worked in the long term, never has it worked in the medium term. I said, sometimes it works in the short term. I own Japanese shares. I even own the Japanese currency as we speak today. But 20 years from now, can you imagine? I won't own this stuff in 5 years.
Right.
Japan is going to be going over the cliff.
Yeah. Now, let's talk about China. Last time you were here, we talked about China as well. The third plenum, it made it clear during that time that the Chinese is going to move towards a consumer-led growth economy. In your view, Jim, will that shift lead to further slowing in the growth of China?
Some places will slow down, yes. When you shift your economy from one place to another, the people you shift away from slow down, the people that you shift to grow. In the meantime, the whole overall may slow down some. But yes, but nothing goes straight up forever, Erin. In America in the 19th century, as we were on the rise, we had 15 depressions with a D. And yet we came out of the 19th century as the most successful country in the world in the 20th century. This is just a normal transition that China is going through. Some people will suffer, some will benefit. If you look at the plenum, which you mentioned, you'll see they say we're going to help these industries. Erin, if the Chinese government, which has vast amounts of money and a great track record, is going to put a lot of money into some industries, I am too, you know, because I know that somebody's going to make a lot of money, and I hope I'm one of them.
Now, what about bad debt in China, though? In 2013, non-performing loans at banks in China, they increased for an 8th straight quarter. Then, in December, we saw this mini funding crisis, and the Chinese government is now letting banks roll over all of this debt, roll the debt over. Are the Chinese doing what the Americans and Japanese did before them and putting off the inevitable write-downs like we spoke about?
Well, absolutely. It's a mistake. When people go bankrupt, you let them go bankrupt and you start over. You know, kicking the can down the road or denying reality is never good for anybody. China will certainly have problems. Everybody has problems as they rise, including China, who's done a brilliant job in the past 30 years. But, Erin, I'm not going to stop getting involved with China just because problems start developing. In that plenum, they said we're going to help. These industries are going to do well. Those industries are going to continue to do well. Other people will suffer. I'm not sure the Chinese stock market has made its bottom yet, but I do know that some industries are going to come out of all this making huge amounts of money.
Okay, now, I know that you're keen on China. The future is bright in the long term, all that. But here in the U.S., a lot of our guests, they're very troubled, and they've been talking a lot about the financialization of the U.S. economy, driven by Wall Street instead of Main Street. Now, do you think this financialization is key to why the U.S. is having problems today?
Of course it is. I mean, people at Wall Street are making fortunes right now. They think they've died and gone to heaven or won the lottery or something. But, Erin, unemployment in America is higher now than it was before 2008. This hasn't solved any problems. Yes, they're printing a lot of money. Obama's spending a lot of money. The people are getting all of this money, and their friends are very happy. They think things are great. But the overall situation underneath is deteriorating more and more and more.
Now, I have one last question for you. I want to ask you about commodities because I like commodities and I like talking about them. I know that you were really, really long on sugar for a while, but that ended. What are you looking at in the commodity market today?
Well, sugar went up, came back down. You should buy sugar. I'm very keen on sugar right now. Agriculture is what I'm most interested in at the moment. You know, as you look around the world, most financial assets are down. Agricultural products are up. in 2014, and I'm very optimistic about the future of agriculture in America, worldwide. You should become a farmer, Erin.
I should become a farmer. I mean, specifically what in agriculture, though? You just gave it to me. You said become a farmer, but outside of that, I like my job. I love being a reporter. But what do you mean specifically if I'm going to invest? What would you say?
Well, first I would ask, do you know how to drive a tractor?
I can drive a stick-shift car. Does that count?
That'll help. Anyway, if you don't want to become a farmer, farmers have been in a terrible business for 30 years. That's about to change. Erin, the farmers are going to be driving the Lamborghinis in the future. The stockbrokers are going to be driving tractors or taxis, perhaps even. The good ones will learn how to drive a tractor so they can work for the rich farmers. The world is in the process of changing. The financial center has had its 30 years. Now it's going to be the people who produce real goods. You should become a farmer, buy a farm. You can become a tractor salesman, sell seed, fertilizer, lots of ways to get involved. You could become the agricultural correspondent. You love being a reporter? Be the farm reporter. Got
it. Thank you. I'm glad that I found my new mentor, Jim. This is awesome. Jim, thank you so much. We always love having you on. Your insight, your comedy, for lack of a better word, sad comedy, but comedy nonetheless. And we love hearing from you. Thank you so much. Please come back on very soon.
It is my delight, Erin. Let's do it again.
That was famed investor and my buddy, Jim Rogers. Time now for today's big deal. Mr. Edward Harrison joins me now to discuss cash, argent, geld, dinero, loot, quid. What is the Russian one? DNG and bling. You know, all that good stuff. All that stuff. All that stuff. I'm over here now. Now, while plastic is becoming more prevalent every year, physical money is still very much alive and well. And while many of us use it every day, we rarely take the time to examine the bills we're handling. However, the U.S. dollar note, along with many other physical currencies, contains loads of information on them. Now, there are 12 different reserve banks in the U.S. responsible for printing money. And you can quickly figure out which bank your buck came from by looking at, thank you for that handoff, Ed. I don't know if anyone saw it. Looking at this little guy right here, this letter right there. Here, see that? That little number there? Now, basically,
Atlanta.
Let's see if you're right. Hold on. I have my little cheat sheet right here. F is Atlanta.
There you go.
Let's see another one. What's this? D. Can you do it? Do you know
Cleveland.
which one D is?
Cleveland.
Cleveland. He got it right. Oh my God, he got it right. Let's see if you. K.
Oh, I already knew that. That's San Francisco.
Wrong. It's Dallas. Sorry, I shouldn't have been so excited. But you're never wrong, which is why this is a massive moment here on BoomBust. Okay. Now, well, Ed and I point out that. Excuse me. Ed and I will point out that we're not numismatic experts. That's actually, if you're wondering what that word means, it is a person who likes currency. Now, we're not experts in that, but we are curious people, which got us wondering about what the words inscribed on money actually mean, specifically the British pound, in fact. Now, check this out. On a 10-pound note, written right under the Bank of England in big, big letters, it reads, "I promise to pay the bearer on demand the sum of 10 pounds. Okay, Ed, if I was to write you an IOU on a piece of paper, like just now, if you got me pizza or something, I would probably scribble down the same exact words just to make it sound legitimate. What does it actually mean?
Well, that's a good question, because what does it mean? I, Erin, promise to pay you the sum
you got one
of
right there.
10 IOUs. I mean, that's what this is saying. I have this British pound right here. So basically what it's saying is that this is fiat money, that this money is, we've created this money, and whoever has the money within this system will be able to pay 10 pounds, whatever that's going to mean. But from the British government's perspective, basically because they're a fiat currency issuer, what they're saying is that we have a claim on future productivity, on future productive wealth within the British realm. And as a result of that, we can tax on that wealth, and the money that's created in British pounds is an IOU claim on that wealth that we are able to tax going forward.
Now, I know that this question seems really sophomoric, but the idea is like 10 pounds. 10 pounds of what? Seashells, rocks, gold, 10 pounds. I understand that, you know, U.S. it's called dollars, it's called lira. There's all different names for what that is, but what do they mean pounds? 10 pounds of what? Well,
yeah, I think that's the thing, and this is what the scary thing for people in terms of going away from the gold standard or something that's connected to it, because basically it's not, there's no intrinsic value. You can think of it as a token almost, like a ticket. You know, it's really the fact that the government has created this money and that they have a claim on productive wealth going forward, and that they are the steward, if you will, of the economy as a whole, and therefore, because of their stewardship, they're able to increase wealth in the economy and tax it, and therefore the money will maintain some value.
Now, claim on productive wealth, what do you mean by that?
I mean that, you know, GDP goes up over time, and as a result of that, the economy will grow and people will become richer. But
God willing, that's
exactly.
That's the assumption, yeah.
No, you were just talking to Jim Rogers about the financialization of the economy. Now, obviously, if you're blowing asset bubbles and you're basically trying to use that in order to create wealth, then when those bubbles pop, you have a huge amount of what Austrians would call malinvestment, and that needs to be cleaned up. And over the longer term, you know, that's actually destructive to wealth. So you're actually decreasing the growth in real wealth. And over time, that's going to be a very negative factor for the economy.
So do you think these words inscribed on all these different currencies, they're misleading?
No, I think that, you know, like
they're
on the
actually very straightforward.
An interesting thing is on the U.S. dollar at the top here, it says this note is legal tender for all debts, public and private. So basically, what it's saying is that, you know, if you tried to use euros, let's say that you're
right
a grocery
about the Federal
store,
Reserve number there.
Exactly.
So, yeah. Okay.
I'm going to use euros in my grocery store and I'll accept them. The U.S. government would say no. We're going to come in and we're going to put you in jail because the U.S. dollar is legal tender. So not only do we have a claim on the productive wealth of the United States and can tax that wealth, but also we can make sure that our money that we are creating at fiat is the only money that is usable in the realm that we control.
All debts private and public. Ed, thank you so much. Interesting stuff. That's all for now, but you can see all segments featured in today's show on YouTube at youtube.com/BoomBustRT. We also love hearing from you, so please check out our Facebook page, facebook.com/BoomBustRT. You can also tweet at us at Erin, at EdwardNH. That's all for now. From all of us here at BoomBust, thank you for watching. Have a great night. Bye-bye.